So dollar yen, um, in a nutshell, I think this has got much higher to run. You've got all of this in here, which will be targeted. So between um, this high over here, which will be a 50%, sorry, so essentially half of this range's length up to here. So we're targeting at that point 142.20s. Um, and then above there, they're going to be stopped. So I think that could trigger a cascade and a run on stops. And then through there, there's very little in the way, according to the daily chart, until that point. And that will then be um, a 1.5 times the length of that range extension. So targeting 145 in a nutshell. And fundamentally, absolutely, that could happen. Yeah, the Bank of Japan leaving policy unchanged in the early hours of the morning or last night in Asia. Um, I mean, that was universally expected. We got some weakening in the yen. During the press conference, um, threats were made about intervention, and you actually tend to see um, what's the word I'm looking for? Bear with me. Um, well, I don't know what it is. Irrespective of those threats, you tend to see the market attack um, the authorities on that. So, um, no, I want to find that word. Hold on, give me a second. Counterintuitively. There we go. So, counterintuitively, where you would want to see, or the authorities would like to see their verbal intervention trigger nervousness in the market and the yen to strengthen. But more often than not, you actually see the complete opposite, and the yen weaken further, almost as if it was a direct attack and an attempt to test the authorities in Japan over their threats of intervention. So anyway, um, if you go back and back test that over, I mean, just recently, I mean, last year we were seeing plenty of verbal intervention and the market just running straight through it. Anyway, so and then in that respect, really they'll only be moved by the a hawkish switch at the Bank of Japan once there is further weakness of the yen or distortions in the curve. So for the time being, we're playing the divergence between the Fed and the Bank of Japan, and all the while that the data starts to come out strong in the US, like today's consumer sentiment, for instance, which is triggering this move, you'll tend to see favoritism to the upside in dollar yen on the back of a stronger dollar and prospects of a hawkish Fed. So we pause this time around. Next week, Powell is likely to underpin uh, the the notion that there will be no rate cuts at least for another couple of years. That the battle is yet but one, and there are prospects of further tightening ahead. So that would likely play into a higher dollar yen as well. And in that regard, jobless claims next week will be uh, a highlight as well. They've held at the previous week's higher level, but in recent data. But how many more weeks does that rise has to continue for markets to be confident the labour market's weakening? So we'll see how we get on there as well. Um, I was going to wrap it up there, but so this is the daily chart. We're seeing that move up. If we go back to the weekly, in fact, And let's just pull the Fibonacci scale on that correction. And if we draw that so we can actually see it, there you go. And dim this one right down. We'll move this to the left. Bear with me, sorry. Okay, so we've already had the extension through the minus 272, and we're making good track towards the minus 618. So that ties in nicely for the target of the 20s as well. On the lower time frames, we are respecting this trend, and long may that continue into the close for today. We'll see how we get on. The area of support is likely to be within here, so keeping stops below there in anticipation of a move up, and as the structure moves, we can move the structure up along with it if you want to manage your risk in that fashion by moving a stop loss along with the move up.